Welcome to Asian Economy Channel. I'm Antony. Renowned economist Nouriel Roubini, who holds Iranian nationality and accurately predicted the U.S. subprime mortgage crisis, expressed concerns in a recent interview on May 28th. He stated that the ongoing high-risk and intense struggle over the U.S. debt ceiling is having a damaging impact on the U.S. dollar and U.S. treasuries, leading to potential economic recession and bank collapses. Roubini suggests that this crisis could combine elements of the stagflation crisis of the 1970s with the inflationary debt explosion of the 2008 financial crisis, ultimately triggering a credit crisis for the U.S. dollar and marking the decline of the petrodollar. According to data models from Morgan Stanley, once the U.S. debt ceiling is raised, the U.S. Department of the Treasury is expected to issue new U.S. Treasury bonds worth potentially $1.2 trillion. This issuance aims to bridge the funding gap and balance expenditures with debt repayments. However, such actions could bring sustained turbulence to the banking industry, risking erosion of bank reserves and increased losses. A report by the Hoover Institution supports these concerns, revealing that over 2,315 U.S. banks currently hold assets worth less than their liabilities. The market value of their loan portfolios is $2 trillion lower than their book value. As a result, the recent collapse of 3 U.S. banks is seen as just the beginning, with the possibility of more and larger banks following suit. These outcomes could also accelerate global central banks' divestment from U.S. treasuries, directly impacting the U.S. Department of the Treasury's ability to borrow funds for debt repayment. In response, the U.S. Treasury might request the Federal Reserve to resume buying Treasury bonds, similar to emergency bond purchases conducted by the Bank of England last year. This approach would effectively involve quantitative easing. Ray Dalio, the founder of Bridgewater Associates, issued a warning on May 28th, stating that the current problems facing the U.S. dollar are unlikely to be substantially resolved, regardless of the scale of the agreement reached by Congress or the monetary policies adopted by the Federal Reserve. He believes that the significant issues of U.S. debt and inflation will eventually lead to a catastrophic financial collapse of the U.S. dollar. Jamie Dimon, CEO of J.P. Morgan Chase, also expressed in a letter to shareholders that the U.S. banking crisis is far from over and will continue to have an impact in the coming years. The vulnerability of some low-resilience U.S. shadow banks may result in a financial crisis at any time. Barclays Bank's research report suggests that efforts to de-dollarize globally are reversing the status of the U.S. dollar as a global reserve currency. The recurring debt ceiling showdowns and banking crises in the United States are eroding people's trust in the U.S. dollar and its financial prestige, further damaging U.S. treasuries. As a response, the Central Bank of Iran recently announced plans to prioritize the use of digital currencies, particularly a gold-backed digital reserve currency, in settling cross-border commodity transactions. This move aims to bypass the U.S. dollar, positively impacting the Iranian oil industry, which is currently restricted by the U.S. dollar. Furthermore, the Central Bank of Iran has completed the pilot phase of developing a central bank digital currency, with 10 banks joining the Digital Realm project. The bank has also introduced regulations to facilitate the issuance of gold-backed digital currencies. Additionally, a new currency exchange center has been launched to allow direct trading of gold using foreign currencies, including the Chinese yuan. Iran follows the global trend of central banks by accelerating the increase of its gold reserves. Acquiring more gold has become Iran's primary goal in establishing the currency exchange center. Javad Og, Iran's Minister of Petroleum, announced on May 27th that crude oil exports have reached their highest level since 2018, with total oil exports including crude oil, condensate, and liquefied petroleum gas, amounting to 2.23 million barrels per day. Data shows that Iran's crude oil shipments to the Chinese market have been steadily increasing since 2023. The surge in oil exports is attributed to changes in Iran's oil industry, particularly in terms of exports and settlement methods. Energy advisory firms such as SVB International have reported that Iran's average daily crude oil exports in May reached 1.1 million barrels, the highest level since last year. Additionally, data from energy shipping data companies Vortexa and Kepler revealed that in the past 24 months, at least 28 million tons of Iranian oil have been delivered to China and traded at prices lower than the international oil price. The Chinese yuan has emerged as another currency in the Middle Eastern oil market, alongside the petrodollar. Saudi Arabia, the largest oil exporter in the Middle East, has repeatedly expressed its intention to engage in non-dollar transactions with certain oil trading partners. Analysts believe that as Saudi Arabia and Iran, a significant oil supplier to China, continue to increase their oil shipments to China, the yuan will gain a larger share of the oil market, further challenging the dominance of the petrodollar. Recently, Iraq also announced its plans to settle trades with China in yuan instead of dollars, and the United Arab Emirates expressed its desire to establish an offshore yuan center in the Gulf region. The McGill International Research Institution suggests that major oil-producing countries in the Middle East, including Saudi Arabia, Iran, Iraq, and the United Arab Emirates, could convert a portion of their oil profits into gold reserves, similar to global central banks' practice of converting U.S. Treasury bonds into gold. This would support the establishment of a global digital reserve currency system anchored by gold. Compared to the U.S. dollar, oil prices denominated in gold are more stable, aligning with the long-term interests of oil-producing countries. Shift Gold reported on May 23 that as the de-dollarization process deepens, Saudi Arabia is considering listing and trading oil in renminbi, Chinese currency, on the Shanghai Gold Exchange. The country also aims to convert a portion of its exports profits to China into gold, further reducing its exposure to U.S. dollar risks. The Saudi Central Bank is currently studying the cross-border settlement function of a gold-backed digital currency. Thanks for watching. I hope you enjoy the video and analytics from me. Like and subscribe, PLS.